Hi there, welcome to Kneppy Invest and welcome to my stock picks for 2025. A little bit later than what you usually see in this sort of endeavor. Typically, you see the top stock picks for a particular year released at the start of January, not towards the end of January. But there is a reason behind it. And that reason is because I have placed some limitations on what companies I could choose in this project or endeavor. And those limitations meant I did have to search high and low for some opportunities. And I have come up with 25 companies. Actually, I think it's 24 companies and one ETF that I think could be interesting during 2025. Now, I'll just mention what those limitations are. The first limitation is I didn't want to choose any companies that you chose for your stock picks for 2025. And the problem with that is you did choose quite a few companies that I was not attracted to, but that I do think might do well in this year. The second limitation is I decided not to choose any companies that I currently own either in my high quality portfolio or that I'm trading right now. And that really limited some of the companies that I could choose. So every single company or ETF within this particular list, I don't own currently, but there is a chance I might own some of these companies during 2025. Now, you'll probably notice a bit of a theme once we go through these companies. I think there is a theme, probably 80% of these companies, and it goes back to my investing roots, and that is value or potential value. So really digging deep into that sort of realm of value investing. Now, I'm going to go down the list by time I chose them. Yes, I took about 4 weeks to choose all these 25 companies. The last few were this morning. So what I'm going to do is go through all these companies, or I think it's 24 companies, one ETF, and I'll just tell you why I chose. Why I chose. Simple. And there's going to be a similar theme. Okay, you probably noticed CBA is first on the list. And you're probably wondering, well, I've been saying that CBA is probably the most expensive bank in the world, which is absolutely true. It's significantly overvalued, absolutely true. It's never been this overvalued, probably in its life. That's absolutely true. It's probably in a bubble. That's absolutely, well, I wouldn't say that's absolutely true, but it's looking like a bubble right now. So why have I included CBA? Well, I'm not longing it. I am going to short CBA, not in real life, but in this exercise, I am shorting CBA. I believe by the end of this year, the chance that CBA share price will be lower than it is now is pretty high. I'd say like 70 to 80%. And I think there is a chance it could go all the way down to, say, $100. I think there's a great chance of that happening in 2025. So my first choice for the top stock picks of 2025 is shorting CBA. I have never shorted in my real investing life, and I have no intentions of shorting in the future. So this is just something fun to do for this particular exercise. So shorting CBA. And next on the list is the only non-company, and that is an ETF. This is the TLT Treasury Bond ETF on the NASDAQ. So the only non-ASX listed instrument as well. And the whole reason behind this is because the bond yields rose to about 5% recently. And I thought that probably is the limit. I don't really see how bond yields will rise much more than that. And even if they do at some point during 2025, I think there is a pretty high chance by the end of this year, bond yields will be dropping. Now, this is dependent on a few facts or factors, but I think that's a pretty high chance. Again, maybe 70 to 80% chance that bond yields will have dropped significantly by the end of this year. And if bond yields drop significantly by the end of this year, that means this particular instrument, a Treasury Bond ETF, will go up because bond yields and bond prices are inverse related. All you have to do is just put on the bond yields on this particular chart, and you'll see a beautifully inversely related relationship between the two. So if bond yields start to go down, this particular ETF will start to go up. And in fact, if you have a look at the weekly chart for this, so it's been dropping for a while. It's been dropping since interest rates started to rise. Anyway, so that's the whole reason why I've included this TLT 20 plus year Treasury Bond ETF on the NASDAQ. You also note, if you have a look at the weekly chart, we started to see a really ramp up in volume on this ETF when it got to about 84. So this is a pretty good price to buy, currently at 87.22. All right, so that's why I've chosen this particular instrument, the TLT Treasury Bond ETF. Now into some individual companies on the ASX. And again, just notice a theme. First one is PeopleIn. I'll go back to the daily chart. This one is starting to look like it's wanting to turn around. Possible value. This is definitely not a high quality company, not the sort of company I'd want to own for the long term. And you can see that just by looking how much the share price has dropped. So maximum pessimism has already been priced into the share price. Definitely not a high quality company, but I think this has the potential to turn around. Share price has the potential to possibly even double within a 1 year period. And the other thing is the chart is starting to look interesting. I would have preferred to wait to see the share price get above $1. I'd be a little bit more bullish at that point. Share price could go sideways for a while, but even if the share price goes sideways for 7 or 8 months, I think once it does break out, share price could go up fairly quickly and significantly. So that's PeopleIn. I think there is potential upside here. I don't think the downside is all that much. So again, much more. If you look at a sort of like a risk reward profile here, it's more swayed towards the reward than the risk. So more upside potential than downside. So many ways you could say that. Anyway, next one is Tourism Holdings. Share price of this company dropped significantly back in May. I can't remember if it was a downgrade or bad results. And after that downgrade or bad results, share price has been going sideways. It's been consolidating. That's actually a good sign. So there is a chance that all the negativity has been priced into this company's share price. The other thing is we've started to see the 25 and the 100-day moving average approach each other. And all it needs is one positive announcement from this company and the share price could take off. Again, could take off. My conviction in this particular holding would probably not be that high, but I think we have 10 months, 11 months, 12 months maybe, just to wait for some positive news from Tourism Holdings. And I don't mind the chart. I do like a long consolidation period. And this consolidation period has been, what's that? That's been 8 months. So that's the main reason why I have included Tourism Holdings, because I don't mind the chart and I think there is potential upside here. I would probably prefer to buy about $1.60 than where the share price is now, but beggars can't be choosers. The next one is one that I'm not sure about. This is IPH. IPH Limited share price has dropped a lot. Notice a theme. Share price has dropped a lot. Chart does not look that good. I'll be honest with you. Share price could drop a lot more. So I'm a little bit less confident about this one than, say, PPE or PeopleIn and Tourism Holdings, just because it does look like those particular charts or the share price is starting to at least base. This one, there is actually no sign of that happening just yet. This is more of a value play. And the reason I was thinking that is if you do have a look long-term chart, share price is the lowest it's been since 2018. But I did have a quick look at the fundamentals of this company. And I actually didn't like what I saw. This company has very limited growth, very small growth, if any growth at all. I think their revenue has been growing, but the earnings per share have not been growing. So that would tell me the company has been acquiring and they need to keep on acquiring for growth. Anyway, so main reason I decided to choose this one is just valuation. The P ratio is the lowest it's been for quite a while. So there could be some upside here if sentiment just shifts slightly positive for IPH. But this would be a low confidence one. In fact, this could be the lowest confidence I have in this particular list. The next one is a little bit different. This is Somonmed. And we have seen a little bit of positive news flow come through for this company. I was going to actually exclude Somonmed. I have already excluded Cyclopharm from this list because share price of Cyclopharm has actually increased a fair bit from the 1st of January. And I just didn't want to do that because that would be, I wouldn't say cheating, but that wouldn't look good if I just chose that company because maybe the share price has increased. I didn't choose Cyclopharm because the share price has increased, but because they have released a few positive announcements. And the same thing with Somonmed. We have seen a shift in the sort of the trend in the chart and sentiment in this company. And that shift has really occurred from the start of January. In fact, the breakout Actually, let's go back a bit. Let's decrease there. So the breakout happened towards the end of last year. So we saw some really big volume coming in December, which is a good sign. And we saw a crossover in the moving averages. So this is a little bit different than the other companies I have chosen because this already shows a sign of a turnaround. Shows a sign in a shift in the trend of the share price and also sentiment in the company. And it's just been circumstances, maybe not circumstances, but coincidence, that's a better word. Coincidence that the company has released Appendix 4C and it was quite positive. So I did choose Somonmed towards the start of January and I've decided to leave it in there for now. So Somonmed a little bit different and this was chosen because positive momentum, positive sentiment has come into this company. The next one is also true. That's Aroa Biosurgery. This is one I have been getting close to taking a trading position in and I haven't quite done it yet. This would be probably the closest company here that I would be thinking about taking a position. And this is another case, very similar than Somonmed, where sentiment has shifted from negative to positive. And I do like this particular chart. So I've chosen Aroa Biosurgery just because of the chart. They also have released some more positive, bullish announcements over the past few months. And that's probably is why the sentiment in this company has changed. It's simple. You release positive stuff and sentiment and the trend will change. Okay, back to this sort of common theme I have in choosing these companies, and that is Spark New Zealand. Share price has dropped a lot from its highs towards the start of 2024. Share price has actually almost halved, not quite halved, but more, not quite halved, just almost halved. Chart looks horrible. I think there is potential. The share price is starting to go sideways. So again, if it goes sideways for 6 months, that's okay. If you have a look at the weekly chart for Spark, you'll notice it has looked ugly. So share price got as high as $5 back in early 2024. In fact, the peak was $5.10 in 2023. This has actually, if you do have a look at the 200 or include the 200-week moving average, this has hallmarks of a high-quality company. Yeah, from about 2014 through to 2024, 10-year period has a hallmarks of a high-quality company. Whenever share price gets to 200-week moving average, we see a bit of a bounce. But that particular, argument has fallen flat during 2024 because share price has collapsed. Possibility the market is overreacting here, and I do like the fact that the share price may be starting to base or consolidate. I also like the significant increase in volume over the last 3 or 4 months. So this is telling me that there is potential that fund managers out there do see value and are taking positions in this company. So this is Spark New Zealand. Probably when it comes to confidence, I have this well above IPH and maybe towards, a little bit lower than PeopleIn and tourism. The next one is IDP Education. I wouldn't say I've made fun of this company in the past, but I think this company was significantly overvalued, say, for a period of time. And this company was, I would say it was a hyped up company, hyped up stock, a market darling. You'll notice a lot of people on Ausbiz The Core really ramped this one up for a while there. My main concerns about IDP Education were the very fact that they were or could be significantly affected by any changes in government regulations, which is why I would never pay a premium for this company. And we've seen that play out over the past few years, maybe even shorter than that. So share price, well-defined downtrend since start of 2023. Share price has dropped from $32 down to $12.86. So we're now getting to the point where I'm actually seeing possible value in this company. So going from way overvalued in like the start of 2023 all the way down to, I see some value. And this company has experienced some government regulation problems. I think it's Canada as well. And the share price has dropped. And it's getting to the point where I think, this is starting to look interesting. I'm not really seeing any sort of consolidation with share price just yet, but possibly bottom 1150. So I've just included this because of value. By the way, the P ratio, I would assume, 27. So there is already still a bit of growth left in here. But if you have a look at the weekly chart, and if we go all the way to when the share price started to drop, this also showed signs of a high quality company. And I don't think you can say that right now. This sort of company does get affected by government regulation. You have to take that into account. Anyway, so that's why I've chosen IDP Education. I think there is a definite possibility that the low has been reached and maybe there is some value for this company moving forward. Same is true for the next one. However, it's a gold company, SSR Mining. Company had operations in Turkey. There was a massive decrease in share price in February 2024, Valentine's Day. Some Turkish mining disaster. It's in the back of my memory. SSR Mining, Turkish. There it is. In February 2024, landslide at the mine killed 9 workers and forced the company to suspend operations. Not really following that anymore. I'm not sure if they've gone back to operations or they've just closed the mine down. But that's why the share price dove a fair bit. So, in fact, the share price before that was in trouble, in the downtrend. Now, the one thing you notice by this chart is we have seen a bit of a shift in sentiment and a trend in the share price. So things are moving in the right direction for SSR Mining. So it's taken about a year for really sentiment and a trend to change from negative to positive. So I do like the chart in this one, and that's why I've chosen SSR Mining. I just like the chart. I like the chart. Chart's looking good for this company. Probably the only gold company in this list. The next one is Air New Zealand. So this is an interesting one because the share price was in a downtrend, significantly different than the chart you see with Qantas. So Qantas share price in an uptrend, Air New Zealand in downtrend. So there is a bit of disconnection between the two companies. I had someone trying to tell me that they're different type of companies. Air New Zealand and Qantas are different. So you should have a look at both companies and you'll see they're completely different companies. They're both airline companies. I'm not sure what else there can be difference about too, but they're both airline companies. Really interesting. If you go back to September, August 2023, you notice the share price ripped higher for a week or 2 weeks and then fell. That was because it went ex-dividend. And that was a catalyst for the share price to move into downtrend. It was just they went ex-dividend. And the share price dropped all the way from 70 cents down to a low of about 47 cents. And we've seen a crossover in the moving averages, and the share price started to move higher. And I do think there is definitely an argument that this is way better value than Qantas. I think Qantas is significantly overvalued, and there's definitely an argument this one could be undervalued, and I don't mind the chart. In fact, I wouldn't have picked Air New Zealand if I didn't like the chart here, but I do like the chart for this particular company. Would I buy this in real life? Probably not, but this is different. So choosing companies, I had to choose 25 companies, and I just could not find anyone. So that's one of the reasons Air New Zealand made this list, because I just had to make a choice. Pilbara, definitely one company I am looking at for a possible buy in the future, depending on what happens with the lithium market. So this is a lithium player. I would say this is one of the biggest lithium miners in the world. I could be completely wrong there. Share price going down. Obvious reasons why the share price is going down. Lithium prices have been going down. There is maybe signs lithium prices starting to consolidate, go sideways. So signs that the lithium market is at the bottom of the cycle. We don't know how long that bottom could go for. It could go for the next 3 or 5 years. Just don't know. But we do know that mining is cyclical, and the time to buy mining companies is at the bottom of the cycle. And that's why lithium companies are at, I wouldn't say high on my list of potential buys, but definitely they're getting to that point. I have not yet taken in positions in any lithium companies. I did have 2 lithium companies in this list, but I had to pare it down to 25. And Liontown Resources was the other lithium company I had chosen, but I decided just to keep with Pilbara Minerals. So this could be really a nothing trade. It's not that it's a trade, but the share price could do nothing over the next year, because I'm not sure when we'll see a little bit more positiveness come in lithium. So this could be more of a 2026 or even 2027 play. That's Pilbara Minerals. And if it's 2026 and 2027, this could still be on this particular list for those years when I choose 25 companies. Next one is oil. Karoon Energy. This is just value. This is just value. The chart doesn't look very good at all. This is just value. I had a look at Karoon Energy and just the valuation of the company. I was thinking, if I was just using or looking at value, I'd probably be fairly interested in this company. Don't like the chart. They have released a few negative. That's right. They had a duster recently. One of their drills was didn't find anything but dirt or something, so they plugged that up permanently. So that was why the share price dropped, I forget exactly when, a week or 2 weeks ago. But the chart doesn't look very good. It's just valuation. This is purely valuation. And because I do think there's value here, there's a chance the share price could go up in the next year. It could be 2026 again. Who knows? And again, this is going to be, share price of Karoon will move or be correlated to the movement in oil prices. And we know oil prices haven't moved over the past 20 years. So you really have to trade oil if you're willing to go into that space. Next one is City Chic. Okay, City Chic. Share price has been absolutely destroyed. No reason to be thinking about buying this one, I suppose. But City Chic, share price has been going sideways. The most recent really bad announcement was probably in June. Share price dropped 52% on that day. There was a positive announcement just after that in August. But the share price pulled back fairly quickly. I think a couple raising in November. I could be wrong. Down 26.7%. Share price really going sideways after that. So, in fact, this is fairly similar than Tourism Holdings because after the June bad announcement, share price has just gone sideways. So that could be the end of the bad news for City Chic. And I would say if this company does turn things around, big word there, if, the most important word, if this company does turn things around, there could be some value here. Markup 44.85 million. But don't forget, Mosaic Brands has gone bust. So there could be more pain for some of these retail companies. But this is just, I think there is a possibility. There is just that possibility that share price could be significantly higher in 1 year if things go right for this company. So a bit of a, I wouldn't say a hope pick, but I do see some potential there. So I think there's more reward than risk. So yeah, that's one of those plays. That's sort of similar than this one. I do think GQG, I would say the market has overreacted to this. So they have or had some sort of relationship with Aldani, and some things have gone wrong for Aldani, like, I don't know, I forget what it was, but for the guy, the founder of that company. And because of this relationship between GQG Partners and Adani, share price has collapsed. I actually would say there's possible some value in this right now, but the optics around that have not looked good. And we have seen a bit of a slowdown in the increase in funds under management or assets under management. And that's another reason why the share price has dropped. So there is potential that the market is overreacting to this one. There's also potential share price could keep on dropping. So this is just me thinking maybe the market is overreacting. So there we go. In real life, I'm not even close to even thinking about taking position in GQG Partners, but I had to choose 25, right? The next one is really interesting. RFF, what's this one? Rural Funds. This was just me looking at the chart one day and going, look where the chart is based off previous, based off the past. You notice a line here, a dash line, that's a support line at about $1.62. So if you have a look at the weekly chart, that support line goes all the way back to COVID-19 and doesn't really go back further than that. So that's sort of the lows, not quite the lows in COVID-19. You notice just before COVID-19, share price actually dropped below that level. That was a short report. So this was in August 2019, a short report. Share price bounced, and then not long after, share price dropped a lot. This was in September. We saw support at $1.62, and then during COVID-19, share price fell to about $1.62 again. So obviously around that level is a nice support, and the share price is right on $1.62 as we speak. So $1.63. So this is one where I did choose this one a few weeks ago, and the share price has continued to fall. And I wouldn't be surprised to see this being oversold or significantly oversold right now, and a pretty good bounce happening. It could be a short-term bounce. This is one I'm close to just trading for that bounce in real life. You also notice the volume. Some big volume is coming in the last few weeks. That's a good sign that people are seeing some value here for rural funds. So not sure what has caused the share price to drop significantly. I don't really care. I think it's oversold. By the way, I don't usually look at RSI. I can sort of tell if a company is oversold or overbought. And if I'm just want to prove it to myself or prove it to you, I just have a look at relative strength index, and this should be oversold. There it is oversold. Not quite as oversold as it was back in December. So you can just see it was really oversold back in December, and there was a really weak bounce. So not a very good bounce. I thought maybe now would be more oversold than then, but it is oversold. So I do expect a bounce, but the bounce could be fairly weak. But you're buying on a potential bounce when the share price is at a support level. So that tends to be fairly powerful. I would prefer the support level to be at a round number, like $1. That would be even more powerful. So that's why I've included rural funds, just because I see a potential of a low here. Nufarms. Or Nufarm, this is similar. I don't have much confidence in this one. You notice a massive purple box here. This purple box goes back a long way. Let's have a look. This purple box goes back 15 years. This purple box goes back 15 years. And if you just bought Nufarm, the share price fell into this purple box and then sold it at some point later, you've probably done fairly well. If you just maintained holding in this company for the last 15 years, you've not done well at all. Share price has gone sideways. So this is definitely not high quality company, more of a trading stock. But you can see it going to this block 1, 2, briefly around those, but 1, 2, 3, 4, 5, 6, 7, 8. 8 times in the last 15 years. So once every 2 years. You notice the share price went up significantly between 2015 and 18, went all the way up to $10. So that is maybe a potential gain in this if you are lucky. Anyway, so that's the reason why I've chosen Nufarm, just because it's in that purple box and I see possibility that share price will bounce from here. By the way, if it falls below, and if this was real life and it fell below the bottom of this purple box, it has briefly fallen below the bottom of the purple box in the past, but doesn't say below for long. If it falls below, that would be a really easy trade. You'd buy it as it falls below, expecting a bounce. If it doesn't bounce, you just sell out. Anyway, so that's Nufarm. Just expecting a bounce. The bounce could take a while, and you could be waiting for maybe 6 months or so. It's been in the purple, by the way, it's been in the purple box for about 4 months already. Next on the list is APA Group. Similar theme again. Share price has dropped a fair bit. By the way, this is the weekly chart. We'll maintain the weekly chart and just go back in time. You notice a few lines here. Bottom of the 2016 sell-off was around about $7.20. So that's that bottom line here. I thought that would be a support level. Share price has dropped below it, did bounce a little bit, and then has continued to sell off. So this is more of a case where I think this market could be overreacting, and it wouldn't be surprising to see share price bounce from here. But again, it might take a while for the share price to respond because sentiment is pretty crappy. I was going to say in a different word right now with APA Group. The other thing I liked about this one when I chose it, there was pretty good volume coming through in December. That's could be a good sign that we are starting to see fund managers interested in APA Group as possibly a value play. The next one, can't believe I've included this one, Endeavour. I've said really negative things about this. Way back after it was spun out of Woolworths, there was a lot of positive vibes about this company, defensive, good value. This is when the share price was like between $7.50 and $8, and I just didn't see it. Did not see it, and then share price started to move into a downtrend. It just continued to move in downtrend. As it moved to, say, between $5 and $6, again, people say, oh, pretty good value here for Endeavour Group. It's defensive, blah, blah, blah. Share price has dropped significantly since then, down to $4.16. I'm pretty sure they released something negative not long ago. If you have a look at the daily chart, yeah. So it must have been the AGM. They released something negative. Also in August, the share price, just before they released the results in August 26th, share price looked like it was starting to move up, and then they released results, and that was sort of the catalyst to get out. Share price on that day dropped 6.9%, and that was the shift in sentiment from maybe positive or turning positive to negative. The share price has dropped a lot since then. Negative AGM, share price in downtrend. Why Endeavour Group? Why Endeavour Group indeed? Share price has dropped a lot, and I'm starting to possibly see some value in this company. So again, it comes back to value or possible value. P ratio, this is very rough, by the way. P ratio 14.7. And in fact, if you have a look at the historical P ratio of this company, you don't have much history. I think this does or has been trading above 20 for a lot. So possible value when it comes to Endeavour Group, dividend yield 5.2. So that's not high, 5.2%. So just some possible value. Next on the list is another one where I see possible value. That's NIB Holdings. This is a company I have looked in the past as a possible high quality company. I didn't quite get there. If I'm just looking at the weekly chart here. So if I put in the 200-week moving average, do I see signs of a high-quality company? And in fact, there is signs here, weak signs. So I'm just going to get rid of the other two moving averages. If you go back long enough, yeah. So share price has remained above the 200, well, does remain above the 200-week moving average usually. It did drop during the COVID-19 and is down below there again. So just based off that, and if I thought NIB Holdings was a high-quality company, now's actually a good time to take a long-term position in this company if you think this is a high-quality company. I'm not sure. I have looked at this company in the past, and there's definitely an argument this is probably one of the higher quality health insurance companies on the ASX, maybe the highest. And maybe there is some value here. Maybe, yeah, buying this company below the 200-week moving average is a good proposition. And that's where we are right now with NIB. And that is why I've chosen it, because I think there is some possible value there. If you have a look at some of the other, some of the valuation metrics, P ratio is 14.4. Seems pretty nice. What else you could do is just have a look. Go to FinChart or whatever is your what do you call it? The platform of choice. So, and it's called NHF. I was going to put NIB, but that's the company name. P ratio 14.4. So it looks like TradingView is right. PEG ratio is negative 1.5. Revenue growth, we're seeing revenue growth between 5 and 10%, actually between 7 and 10% over the last 10 years. Earnings per share growth, 9.2% over the last 10 years. So that's probably not exactly what you want to see. I do prefer higher growth than that, but it's okay for this type of company. And even dividend per share growth over the last 10 years is at 10.2%, return equity 18.9. So if you just have a look at, say, the P ratio of NIB Holdings, let's have a look at the historical P ratio. It's toward the bottom. Yeah, this is the last 10 years. Below 15, it very rarely gets below 15. It did get below 15 during the COVID-19 financial panic, but typically the low P ratio for this company is around 16. And now it's at 15, or actually it's 14.29 according to this. So it's on the low side. P ratio has been as high as 35 not that long ago. So maybe there is some value in NHF or NIB Holdings, and that's one of the reasons I've chosen it. And in real life, I could imagine myself buying this one if I see a bit of a turnaround in the chart. Even at these levels, yeah, even if I don't see a turnaround in the chart, I think there could be some value in NIB Holdings. I'll probably have to do a little bit more research because I don't follow the company all that closely. And there might be a reason why the share price has dropped. It looks like there was a big share price drop in August. So results, market didn't like the results. Share price dropped 17.7% on that particular day. And the negative vibes around those results have continued to this day. All it takes is one positive announcement and you might see a shift in sentiment and a trend in the share price. Okay, next one is lifestyle communities. Oh, if I was only choosing 20 companies, this is probably one of the companies I would leave out. Maybe some value here, or maybe I wouldn't. I'm just having a look at the chart here. I actually don't mind this particular chart. So share price of lifestyle communities has dropped a lot of negative news about this company. They build lifestyle communities, I suppose. And it's just been some negative media, ABC, Four Corners maybe, that sort of thing. Anyway, so before that, if you do go back to the weekly chart and just have a look at the, say, 200-week moving average, this had all hallmarks of a high-quality company. And the reason is, whenever you see the share price drop towards the 200-week moving average, you buy. And you would have done really well. That sort of thematic or that sort of proposition changed not that long ago. In fact, the share price went well above the 200-week moving average back in October 2021, really overvalued. And I still remember that thinking, why would anyone be buying this at that sort of level? And the share price dropped all the way back down to 200-week moving average. And really, the chart hasn't looked good since then. Share price has moved to a downtrend. Is there value here? Maybe. But I do like how the share price is starting to turn. At least its basing looks like. And maybe the share price is trying to break out. I did put this line at 950. That's definitely a resistance level, and it tried to break out above that level during the last week. So lifestyle communities starting to look a little bit more interesting. Okay, next one is Nine Entertainment Company. I actually went through the charts yesterday because I needed to increase the amount of companies to 25, and I was just struggling. And then I came across Nine Entertainment Company, and I was like, really? Really? The chart looks awful. I'm not the biggest fan of these type of companies. And then I just saw, well, just based off the chart, if you get rid of the, not that one, we'll get rid of the 200-day moving average. Just looking at the crossover, moving average crossover, a little bit of positive vibes in this one right now. This could be just a sneaky little trade. This is the sort of thing I'm looking for all the time. But this is not the sort of company I'm looking for or even to trade with. I just don't like these sort of companies. By the way, if you have a look at the weekly chart, and if we do just look at charts to determine the quality of a company, just have a look at this chart. This is not a high quality company at all. This is a trading stock. You could also say it's towards the bottom of its long-term range. If the share price gets to 88 cents, by the way, that's a buy, just based off its lows, previous lows. So $1.34, but I only chose this because I did actually like the chart here, what's been happening the last week or so. And yeah, that's it. That's it. Nothing more than that. That's it. 29 metals. I could be ruining this one. No, I wouldn't say maximum pessimism already been priced in, maximum negativity priced in. Share price just keeps on dropping, not quite as low as it did get back in February. This company's projects, I think it's north of Mount Isa, significantly affected by floods over the last few years. In fact, I think it's called Capricorn Project. It's still, last time I looked, it was still flooded. That was a while ago. So maybe they've gone, I don't think they've gone back into production, but it has been significantly affected by weather and flooding. That's why the share price has dropped massively the last few years. Dropped significantly. In fact, the high in the share price of this company is 288. Now it's 22 cents. They've probably done a fair few couple raisings. So even though the share price has dropped a lot, based off dilution, and the markup hasn't dropped as much as what you might think. Share price is close to those lows in February 2024, and that's the reason I have included this company in this list, that I think maybe maximum pessimism has been priced in this company, and maybe I think the upside is better than the downside risk from here. I would not be buying this in real life at all just yet. I'd be wanting to wait just to see. So 29 metals has been chosen. Cogstate, this is a little bit different. I had no thoughts about Cogstate at all. Share price has been generally in a downtrend for a while, and possible signs. Its chart is starting to look a little bit more bullish than it has for a while. I do like this chart. If the share price can get above $1.20, which is not far off, by the way, it's only 1 cent away, that would be a really good sign, getting to a new higher high. So, and you'll also notice really big volume coming in September when the share price did get to its low. So that's actually a good sign that is the bottom right there. Really big volume coming in, good sign. I probably would like to see a little bit big volume coming in right now, but I actually don't mind this chart for Cogstate, and that is why I chose it. And finally, APE, or Eagers Automotive. I keep wanting to say AP Eagers, but it's Eagers Automotive. This is just based off the chart and value. P ratio 11.66, dividend yield 6.3%. And I don't mind the chart. This is definitely one that is actually in my real life watch list for a possible trade. Eagers Automotive. If I was just looking at this based on valuation, down at $10 would have been really good. So it has gone up 22% since then. So yeah, just possible value here. Possible value, and I don't mind the chart either. Okay, so that is the list of 25 companies. I'm pretty sure it's 25. I can verify that. Yep, 25 companies. None of these companies I currently own in real life. I wouldn't say definitely won't own any of these companies over the next 12 months or 11 months. Few of these companies definitely no. A few of these companies maybe. A few of these companies maybe. I'm looking at them closely right now. By the way, I do have the NFL on my iPad. There is a possibility, and maybe I shouldn't say this, there is a possibility. I do have two favorite teams in the NFL. Buffalo Bills is way at the top of there, But if Buffalo Bills went bye-bye for some reason, my second team would be the Philadelphia Eagles. A few reasons behind that. First reason is when I was living in New York, a guy called Donovan McNabb went from Syracuse, which is a university, or probably the biggest university near me in terms of college football, and he went to the Philadelphia Eagles. So I started following that team then. And also my relatives come from Pennsylvania. I think most of my relatives actually go for Pittsburgh Steelers, but I would choose Philadelphia. I just like Philadelphia. Anyway, so there is a possibility that the Super Bowl will be between my two teams, Philadelphia Eagles versus Buffalo Bills, but I would be supporting Buffalo 100%. 100%. Philadelphia Eagles won the Super Bowl a few years ago. Buffalo Bills have never won the Super Bowl. They've been losers 4 times. I think they lost 4 times in a row. I'm pretty sure they lost 4 times in a row. Back in the 1990s, they lost one by missing a field goal. And Buffalo Bills Super Bowl record, I'm pretty sure it's 0-4. Who did the Bills lose 4 Super Bowls in a row? Can you just imagine getting to the championship game in any sport and losing 4 years in a row? Penrith Panthers just won 4 years in a row, but imagine losing 4 years in a row. They lost to the Giants, Cowboys, and Redskins. Let's see how right I am. Where is it? Yeah. I wasn't following the Buffalo Bills at the time because I moved to upstate New York in 1990, late 98, early 99. And that's when I started following the Bills. Yeah, they lost to Giants by a field goal. They missed a field goal, by the way, to win it. Redskins and Dallas Cowboys twice in a row. I'm pretty sure Dallas Cowboys haven't won since then, 94. I'm pretty sure. Anyway, could be wrong. Anyway, so Philadelphia Eagles winning this game I'm watching 55-23. There is no doubt they're going to win this. There's a minute left. Washington Commanders had a pretty good run, but they have hit a juggernaut. Okay, that's all I have for this particular video. I'm going to look silly if Buffalo Bills don't win, but I don't think they're favourites. So more than likely it's going to be between Philadelphia and Kansas City. And if Kansas City win, they've won 3 years in a row. Anyway, that's it for this video. Have a good day. Bye. If you have any questions, any thoughts, leave in the comment section of this video. And don't forget, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.